Welcome, focus learners, to today's explainer. I am super excited to break down a company that is literally making massive waves right now. We're looking at the fundamental investment case for Emmvee Photovoltaic Power Limited. They're a huge player in the clean energy space, and today we're going to dig right into their financial health, their competitive moats, and exactly what the analysts are saying. If you really want to understand what's happening under the hood of India's renewable energy surge, well, you are in exactly the right place. Let's get right into it.
So, here is our quick roadmap for today. First, the solar boom and Emmvee. Second, their business model and that deep moat. Third, explosive revenue and profit growth. Fourth, valuations and peer comparisons. Fifth, ownership trends. And finally, the verdict.
All right, section 1, the solar boom and Emmvee, macro to micro.
You know, the foundation of all this growth is driven by a few absolutely crucial factors. India has a vast solar potential. We're talking 748 gigawatts. Add to that the rising number of electric vehicles on the road, massive data centers demanding more power, the whole push for green hydrogen, and just strong ESG alignment from major corporations. The environment is perfectly primed for companies that actually supply the physical hardware for this whole energy transition.
But what's truly mind-blowing is India's bold renewable energy target, 500 gigawatts by the year 2030. To actually get there, the government is mandating 50 gigawatts of annual tendering cycles. That is a guaranteed, massive pipeline of demand for solar infrastructure every single year for the foreseeable future. So how does this play into Emmvee's specific strategy? Well, look at the industry as a whole. Domestic solar module manufacturing capacity expanded by a staggering 290% between March 2022 and March 2025. And Emmvee, they aren't just riding this wave, they are aggressively going after a bigger slice of the pie. Backed by recent financing, they've got a strategic plan to scale production to 16.30 gigawatts for modules and 8.94 gigawatts for cells by the first half of fiscal 2028. They are timing this aggressive scale-up perfectly to meet that 500 gigawatt national goal. Moving on to Section 2, Business Model and Deep Moat, the Fortress.
Okay, Emmvee is actually India's second largest pure-play integrated solar cell and module manufacturer. They use advanced TOPCon and mono-PERC technologies, but honestly, their real superpower? It's their deep, backward vertical integration. They don't just assemble the modules, they actually manufacture the raw solar cells themselves. Plus, they hold this really rare dual ALMM certification, which basically means they are government approved for both their cells and modules. This is an absolute game changer when it comes to winning those lucrative government contracts. I really want to highlight this exact quote straight from the SMFS Limited IPO report. They call this integration a formidable competitive moat. And why is that? Because controlling everything from raw cell manufacturing all the way to module assembly literally eliminates the middlemen. It gives them superior quality control and, critically, it substantially reduces their foreign exchange exposure compared to competitors who have to rely on importing parts. They are heavily insulated from global supply chain shock.
All right, Section 3, Explosive Revenue and Profit Growth. The numbers. Let's see if the financials actually back up this business model.
Boom. 392.38 crore rupees. That is Emmvee's net profit for the most recent quarter. It's a striking number, the kind that would make literally any CFO smile when they're looking over their earnings report.
Now, for anyone newer to reading these financial reports, let's briefly break down what that actually means in context. That 392.38 crore profit, that represents a remarkable 48.83% jump from just the previous quarter, what we call quarter-on-quarter growth. And compared to the exact same time last year, it's a phenomenal 89.43% year-over-year growth. I mean, they are effectively doubling their profit pace.
Historically, the velocity of this revenue spike is just incredible. Look at this. In fiscal 24, they did 952 crores. By fiscal 25, that jumped to 2,336 crores. And in just the first 9 months of fiscal 26, they hit 3,311 crores. What's even more impressive is that their operating margins expanded to a very healthy 35.1% in late FY26. According to the reports, this was driven by favorable pricing for modules that use those domestically produced cells, again, proving the immense value of that backward integration moat we just talked about. And here's a surprising, incredibly powerful fact. Despite all this rapid historical growth, they still have an active, unfulfilled order pipeline of 12,781 crores. This gives investors incredible future revenue visibility. They aren't just relying on hope here, they literally have the contracts in hand. Let's look at Section 4, Valuations and Peer Comparison, Pricing the Growth. So how is the open market actually pricing all of this explosive growth? Well, there is a really clear valuation gap in the sector right now. The price to earnings, or PE ratio, basically tells us how much investors are willing to pay for 1 rupee of company profit. Right now, Emmvee is trading at a multiple of 20.01x. Compare that to a major peer like Waaree Energies, which is trading up at 36x. Emmvee is sitting at a noticeably lower multiple despite those incredible growth metrics.
And just to put a total value on the whole shebang, the IPO snapshot listed Emmvee's market capitalization at 15,023.9 crores. This firmly establishes them as a heavyweight in the sector, but as we just noted, one that the market might be pricing a bit more conservatively than its peers.
Moving to Section 5, Ownership and Shareholding Trends, Who's in Control?
The post-issue shareholding pattern reveals something very interesting about insider confidence. The promoters, the founders and original insiders, they have retained an overwhelming 80.70% of the company. The public holds just 19.30%. This strongly suggests that management has absolute unshakable skin in the game. They aren't cashing out, they're strapping in for the long haul.
And speaking of that management, here is the core leadership team driving this vertically integrated strategy forward. We've got Chairman and Managing Director Manjunatha Danti Venkaratnaya, CEO Suhas Danti Manjunatha, and Non-Executive Director Shubha Manjunatha Danti. This is the exact team executing that super ambitious scale-up to 16.30 gigawatts.
Finally, Section 6. Final verdict and analyst targets. Let's bring it all together.
Objectively looking at the institutional outlook, the consensus is looking very strong. JM Financial has issued a buy rating with a target price of 341 rupees, eyeing a solid 25% upside. Meanwhile, SMFIS Limited issued a firm subscribe recommendation, explicitly pointing to the company's strong integrated moat, their advanced technological capabilities, and their perfect alignment with government-backed opportunities.
Which brings us to our final thought. We've just seen a company with over 12,000 crores in their order book, an almost 90% year-over-year profit jump, and a deep, protective moat in a sector that is backed by the full weight of India's 500-gigawatt renewable ambitions. So, you have to weigh these immense macro tailwinds against the raw financial facts we've just laid out. Does this integrated solar giant deserve a spot in your portfolio? It is for sure a fascinating case study in scaling up for the green transition. Keep learning, keep analyzing, and thanks so much for joining me on this explainer today.